Hey everyone, Sean Smith here at Dedicated Commercial Recovery in Roseville, Minnesota. I'm the founder and CEO. We're continuing our vlog series today with Sean Murray from deBanked. This is episode number 2. We're going to be discussing what's next in Fintech and alternative finance and the collection industry and legal enforcement space in Fintech and alternative funding and what that looks like and how it's going to change. So I hope you enjoy. Thank you as always for tuning in. So let me ask this, as a leader in Fintech and really all things alternative funding, what do you see as the greatest challenge that lies ahead in the next 12 to 24 months, but also the greatest opportunity?
Yeah. Well, if you work on the small business finance side, one of the biggest challenges, it's not just recovering from COVID, it's all the government programs that have come out and all of the potential future government programs. I think by now we're all pretty familiar that, PPP and EIDL has greatly impacted the private marketplace. It's kind of unheard of for the government to just write checks for, 100K, 200K and just hand it out. I've never heard of anything like it. And you and I may even know some people that have gotten it themselves. And so it's definitely changed the dynamic because those companies who otherwise might be searching for a financing solution are just getting money from the government, and it's typically pretty inexpensive, right? Or even free. And I think that's honestly the biggest challenge, is competing against government programs that already came out. We're about to have another round of PPP, and then we must consider that there could be future things. I don't know if it's going to be PPP. It could be a state program. And there are some state programs out there. And it's going to be hard to compete against that. And it's going to be hard to compete against business owners thinking that something else could come out. They're like, well, there might not be anything now, but there could be in 6 months. And it could be free. So I'm going to wait.
Yeah.
So I think that's one of the hardest things to deal with. On the other side of it is that I think there's going to be a great demand for capital, unlike anything we've ever seen. And so I think if people have left the business in 2020, and I know that there have been quite a few, I think it's a mistake. I think that we're going to go into just an unprecedented time frame of demand where everyone is going to be looking for a way to come out on top and edge out competitors. They're going to be looking to make moves. It's kind of like a roaring 20s scenario. Right? Yep. You go through this whole period of where everything's kind of like, destitute and uncertain, and then people are just going to be like roaring to go.
Yep.
And it will be a really, really good time once we get this, the government programs out of the way, to be a broker, lender, funder, factor, equipment leasing company, whatever it is.
So many probably controversial opinions I could toss in there of the value of some of those programs, but I definitely know with us being on the front line, I know they have absolutely been lifelines to companies, but yeah, it is definitely unprecedented and has led to such weird nuances, even on our side, on the collections and legal enforcement side. So I appreciate your insight, and I'm in 100% agreement with you. And I think people are already antsy. And I'm excited when we get past what I call limbo phase to really see what we can do again as a country. So that's exciting. I would love to hear from your perspective, just us being, first party, third party collections, legal enforcement. We do some equipment finance things as well, like repossessions, remarketing, that type of thing. But, you have a different, obviously, perch in where you come from. What is your opinion of collections and legal enforcement in this space currently, and how do you see that changing in the upcoming years?
Yeah, well, my opinion is that we're finding that state and federal government, they're trying to continue to blur the line between consumer and business, and that's making it very complicated.
Yep.
We just had a law passed in New York, and the law is focused on disclosures. And they took a consumer lending approach to a commercial, what they saw as the problem, a commercial finance problem or a commercial, finance issue. And they applied consumer finance or consumer lending solution to it. And we're hearing a lot of that rhetoric, not just in New York, but we're hearing it in Washington, D.C. And maybe there's some dollar amount as to revenue generated per year. But, we're starting to hear things where if you're doing $2 million a year or less, that you're basically a consumer, which is insane.
Right.
Anyone who can generate, $1 million a year in business has got to be somewhat sophisticated to,
right.
to handle business, right? And people should be allowed to make bad business decisions. That's not something we can legislate out of existence. Right. I don't know do you watch Shark Tank? Have you ever seen Shark Tank?
It's a staple in my family.
Okay. So something that I noticed on the show is that all these deals will be offered, and sometimes the entrepreneur or entrepreneurs will take a really bad deal. And after the entrepreneur walks off stage, all the sharks have a good laugh. I can't believe he took that. I can't believe she did that. She should have taken this one. Well, that's life. And it was that entrepreneur's decision to make. And they might have had their own reasons for doing it. And you know what? It could have been a bad decision. But I think it would be really sad if government said, whoa, do over. You know what I mean? You're not allowed to. You're not allowed to do that. Let's film this whole segment again. That was unfair. But how this relates to collections is that commercial finance collecting being bound by, and you know the ins and outs of collections laws better than I do, but I think it could be difficult if commercial collections companies are bound entirely to the way that consumer collections, consumer lending laws operate. I don't know if that's a fear that you have, but I see that those two things, consumer and business, getting blurred together more down the road.
100%. One of the things that's was interesting for years is that basically on the consumer side, you couldn't really do any texting, but we were able to do it on the commercial side. And that's what people wanted. It was a great way for them. They're busy entrepreneurs, Friday, I can make that payment. Reach out to me then. Okay, no problem. And that would work out great. But you couldn't do that on the consumer side. Now the CPFB came out and gave further clarification finally, which is great. Mm-hmm. But it's things like that where it is hamstrung consumer collections from actually things they want because it was written in the 70s, right? But that's, I think there's a general thought process that, too much government intervention just really is going to hurt the way we do business and the way commercial funding is done as well. And so it has to be a healthy balance. And I think there's a lot of fear around that, both on our side and on the funding side of it. Just, them trying to institute APR, on a non-loan product, it doesn't even make sense. And it's going to be confusing. It's not going to end well. And it's interesting to see people pushing that when there are, we're in the SBFA, we're in the CFC, and they are proposing very good outlines on how to do that and to have guardrails in place. And they're just stuck on the consumer APR side of things without even understanding the product. And it's definitely a fear, and it's definitely frustrating. And it's something I hope we can gain clarification in the future, because ultimately that's going to be better for merchants across the United States as well. So, yeah,
I mean, I will just say on that one end is that from lenders, not MCA companies, but actual lenders I've talked to who are already disclosing an APR, and it's a number that's rather high, say above 50%, is that their own customers, from what they've told me, tend to still look at it from a dollar cost basis. They look at the APR and it doesn't really mean anything. They're trying to calculate, well, how much am I going to pay back? And so it hasn't actually deterred anyone from taking a loan that they otherwise were going to take. Perhaps it feels more transparent to them. I don't know. And one of the arguments that the MCA companies and the factors make is that it's not that we don't want to disclose it or it doesn't make sense. You know what I mean? Like, we don't want anyone to know because we don't, it'll look too high. It's not even that it will look too high. The argument is that it can't be calculated because APR is a very precise formula, and you're dealing with products in which there's no element of time. And if you don't have time in the APR formula, then you can't calculate an APR. And so that's the argument that's being put forth. It doesn't make sense because you can't actually calculate the number.
Well, in between Smartbox and other things, as far as our clients go, they're disclosing that. They know the cost up front. Most of them make that very easy to understand. You know what I mean? So to me, this was not, it's like taking something that's very simple and easy. Like you said, most business owners just tell me how much it's going to cost, and I'll make my decision based on that. And I feel like a lot of this is, let's make it more difficult, more convoluted for everyone to understand and follow. And that just doesn't ultimately help the business any more than it helps the, massive impact that commercial funding is having on small business in the United States, or on commercial collections and collections in general. So it's definitely a challenge in the upcoming years for sure on both sides.
Terrible timing too. I mean, right after COVID. Hey, let's make it more complex. Doesn't make any sense. If they wanted to do it, they should have just waited. If this was how it's going to be, they should have just waited 2, 3, 4 years. Let the dust settle and then implement it. But I think it's the timing. It couldn't be worse.
Yeah, it's definitely just the way government likes to do it, as far as I'm concerned. But we'll leave it at that.
And again, thank you for tuning in to our vlog series, and thank you to Shawn Murray for being a part of it. Please don't forget to like, subscribe, share, and comment. And stay tuned. In 2 weeks on Monday, we'll be launching the final episode of this 3-part series. So thank you as always, and God bless.